Welcome back, everybody. Today we're talking about the stock market and how it just crashed basically all of this week. In fact, the NASDAQ is down 13% in the last month, and it's on pace to have like a record-setting month, like the worst decline since like 2008, I think it was. And on top of that, there's people that have big real estate concerns, and there were a lot of significant earnings that just came out today. So how those are going to affect the market tomorrow? We'll have to think about that a little bit. And then on top of that, I'm going to show you my portfolio so you can see how hard I was hit during this Monday and Tuesday and show you what I'm doing to manage my positions. So first off, you can see the NASDAQ is down 13% in the last month, which is pretty bad, but a lot of companies just had some earnings come out. So first off, we had Google, and you can see after hours, they shot down quite a bit. Let me refresh that. Maybe they caught back up. No, they're still down. So they missed on EPS by 3.6%. They won on revenue, and that's going to be something that's going to help the market go back down even further potentially. Like Google's a big company. If they're failing, how are the rest of the tech stocks going to be doing? So that's very scary to see that Google missed. But on the flip side, it also puts Google at like a nice PE ratio. So if you're buying long term, like this is an awesome opportunity to buy the dip. But for like short-term option sellers, like, it's kind of scary. Like, it's tough to make a short-term bull case right now with the way the market's been behaving. But long-term, it's probably a good buy if you're, investing for the long term. Something I always like to look at is like the financials, like the revenue and earnings, and you can see year over year it just goes up. I'm not concerned about Google in a small decline right now. Like, even I might go long some shares at this point. You don't need to do options for everything. Microsoft, luckily, they beat, and even after they announced that they beat, like the stock still went down. Like the market is looking for any excuse to go down right now. Like everyone is looking to sell off and unload their positions. It's kind of ridiculous. But Microsoft beat, so that's awesome. I do have a short put on Microsoft, although when it did announce their stuff, like you can see aftermarket, it did shoot down to 265 and even 264 before like the numbers really became permanent, I guess, or the bots picked up that it was actually good earnings. So Microsoft shot down before any bad news was really realized. So it just tells you like be careful out there. Like the stock market is just looking for excuses to go down. Again, Microsoft year over year increase in revenue and earnings, like it's just great. PE ratio is below 30. I haven't seen that in a long time for Microsoft. I'm not buying shares of Microsoft. I still have a put on Microsoft. So I guess if that put gets in the money, then I'll end up buying 100 shares. But that's Microsoft. So at least Microsoft's helping to get some positive news out there in the sea of red that we have out there. Visa, another one that just had earnings. Let me go ahead and refresh this real quick. And it does look like they went up after hours, so they beat EPS. I think this event's still going on right now. Or it's done. So I'll have to take a look at that. But again, another company that just keeps growing their revenue and earnings annually and quarterly. I think the PE ratio is still above 30, but Visa around 200 is usually a buy in a lot of people's books anyway, and the dividend gives you a pretty good yield right now. So that's what we're looking at the stock market. I still think that we have room to go down, unfortunately. I think that there's still a lot of people are trying to get out of the market. I'm not sure where they're putting their money at this point. So short term, like a bear case can be made. And then here's how my portfolio did today. Obviously, a lot of stuff went red, so I lost about 4%. It's kind of crazy to think about. Like just last week on Thursday morning, I was at 225, and it's all the way down to 207. But that's the flip side of options. If stuff starts going against you, and you have too much leverage out there, like you feel it a lot quicker than people that are owning stock. Now, to be fair, I do have a kind of gamble-esque position up on AMD that, now I'm getting tempted to close that one out, even for like a significant loss here, just to save whatever premiums left out in this one. Because even if AMD has a terrific earnings call, if the market's still trending down, AMD getting back up above 100 is starting to seem far-fetched with it dropping down to, I think it was 84. Maybe it went further. I hope it didn't go further. Where's AMD? 83. Ooh, you see, it just keeps on dropping. So And that's what my portfolio looks like right now. I only made a couple of trades today. One is in the morning. I once and did some bull put spreads on Amazon, thinking that there's no way it's going to go down to 25.50, so went ahead and sold that one. I'm hoping to get out of this one before earnings on Friday, although with the market going down the way it is, if that continues tomorrow, I don't know. I might have to close this one for a loss, even though I think it's probably a pretty safe spread. And then I decided to buy the dip, put some of my cash into more JEPI and Devo. Like I said, I have JEPI, Devo, and QILD as my main positions in my portfolio, and I'm trying to reduce my portfolio percentage for QILD, but I'm doing that by just buying more of the other ETFs rather than selling QILD. And with that, QILD actually dropped almost $1 today. That's quite a bit. So that's where a lot of my losses came from. The AMD play, which is kind of a gamble to begin with, not so good. I do have some SPY puts that I guess are now a bit concerning. Not too much, because you can always just roll. That's going to be the plan going forward if it happens. So I do have a May 18th 420 SPY put that's now in the money. There's a lot of extrinsic value on it, because extrinsic value has just been spiking because the VIX is up to 32, which I feel like it should have been like for all the entire month. The VIX should have been high. Now it's at levels where I think it's actually legit, at a legit level. So it's the SPY put here. We got plenty of time, May 18th, for the stock market to recover before this is in any trouble. So another one where I'm just going to passively hold it and then roll it at expiration if it's not out of the money. I do have a June 3rd 410 put. I sold this when SPY was at like 423 on Monday. So I thought that might be the low, so I wanted to get ahead and get a head start on the next cycle of the SPY puts. I do have a SPY or a Microsoft put at 265 that just kind of got tested, and hopefully tomorrow we'll see some profit on that if Microsoft stays and goes up as a result of their good earnings. And the rest of these are pretty self-explanatory. Robinhood, I sold the $10 puts. I got tempted by the premium. Now this has been teetering in and out of the money. And I think there's just news that Hood was going to be dropping like 10% of their employees. I have to look that one up, so don't quote me on that, but I just saw an article about that. I want to say it was 10% of their employees, but it might have been more. So just more negative news on Robinhood. Don't know why I sold that put to begin with, but there you go. That's kind of where I'm at right now. I'm hoping that we all get some green days coming up here, because we could really use them, but these right now it just seems like everyone wants to find any excuse to get out, and I just don't know where they're putting their money. Like, where are you going to try to fight inflation outside of the stock market? Real estate, I saw like some Zillow reports, like the first time since I've been following the Zillow annual, the monthly reports, that they're actually downgrading like the percent that they think housing will gain over the course of a year, which is the first time I've seen that. So basically, inflation is hurting the middle class now. You know, people are complaining about gas prices. Like, all these other little expenses add up, and that's just less money that can go towards buying a house. And then on top of that, you have the mortgage interest rate raising right now. I think it's at like 5.5% last I checked. And that means that people that have to borrow money for that mortgage can afford less house. So there's going to be some place that something has to give here. And I think that's going to be housing prices are going to have to come down if people are going to want to try to sell and move. So I expect in the housing market for the real estate, it's going to go down. And if you do have cash, it might be a good time to buy a house if you do a majority cash. But just give it a little bit more time. I think the housing market is going to cool down a little bit as well. So that's kind of all I wanted to touch on this video. Look at your positions. There's going to be a lot of red because the volatility has increased dramatically recently. But that doesn't necessarily mean that your positions are in the are losers yet. Just the VIX went up like 8 points in the last 2 days. So if you were short premium, you're going to be showing red. So really look at your strikes and see, are you actually being tested on those positions? And let that help you determine what you need to manage. As long as you were trading small to begin with and your margin ratio is still small, you can hold it, wait it out, but it might not hurt to reduce a little risk. So positions that you are more concerned about, go ahead and close those. There's nothing wrong with taking a small loss here and there to protect the integrity of your portfolio overall. All right, I think that wraps us up. I hope we do better tomorrow, guys. See you next time.